Hi, everyone. We've just opened the webinar. People are joining in. Let's give it a few minutes so we have everybody in before we get started. Hey, Shiva, how you doing? Good to see you. A lot of people today. I think the topic is quite popular, and we've gotten a lot of sign-ups. So I can see that a large group of people is actually joining us, which is great. Crypto is hot, and I think a lot of people are looking at the space. I'm just going to get started because we have actually already a lot of people in the webinar. All right, so the webinar is about a deep dive into the DeFi space with DeZy or DeZy. This webinar should take about typically one hour. We're just going to take a deep dive. We know that there's people joining with all sorts of experience about with the crypto space, so we're just trying to keep it light so that it's interesting for everyone. I'll launch a poll at the same time. All right, just a quick agenda for today. I'll introduce our guest in a second. Then a quick note on HH. Then we'll do a general introduction on the topic of blockchain and crypto. Then we'll dive into the lending. How does that work? Then we'll sort of talk a little bit more about DeZy and how they are working on the lending space. And then we'll end with a Q&A. As a matter of fact, you can actually answer questions anytime you like. We'll try to answer them as we go. Feel free to use the Q&A function. If there's more questions than we can handle, we'll probably handle them afterwards or follow up by email. And then we'll close it off for today. So let's get started. We have a quick hour and a lot to discuss. So let's jump in. Our guest, Eric. Eric is the founder of DeZy. This is a startup that empowers investors to achieve meaningful savings, income growth, and wealth accumulation. And they are simplifying DeFi. We're going to talk about that, as we go. Eric is an experienced investor. We've been actually working together for quite a long time and invested together in a number of startups. He actually lived in a bunch of different countries, but he's been in Singapore for a while now. And he started an entrepreneurial journey again, and going from investor back to running a startup. So how is that so far, Eric?
Yeah, so far so good. We'll see how long it takes for me to remember the difficulties of the founder side. But yeah, no, it's good. And my business partners and I, we have had the pleasure of building and scaling our own businesses before. So our journey kind of starts back in Europe in around 2006, 2007, where we started the cloud communications business. That scaled. That's ultimately what brought us over to Southeast Asia. Once we got here in 2009, we continued kind of expanding the network of contacts and stumbled into some different kind of investment opportunities. And recently we were very fortunate to exit some of those businesses, including the original one that we built. And we knew that we would eventually get the itch to run something else. It happened a little bit faster, I think, than we anticipated. But yeah, we saw an opportunity to do something in the crypto space, which is an area of passion for ourselves. And yeah, it's just nice to be able to keep working with sort of the same business partners that have been there over the years.
Right. And are you, because we have a crowd of investors and angel investors and VCs, but are you still investing yourself? Do you have time for that, or do you sort of put that on pause?
No, so my main focus is definitely DeFi. And even on the investment side, we have an investment vehicle in Singapore, but we've never been a fund. We don't have any LPs. We've never attracted outside investments. It was always just sort of, if we stumble into an opportunity that we were excited about, we would deploy some personal capital. But in terms of the core focus right now, at least for myself, it's definitely DeZy. And some of the other business partners are looking at some of the investment stuff that we're up to.
Right. Okay, great. Awesome to have you. Thanks for your time.
Thanks for making it.
Just real quick on HH, for the people that don't know us and our journey for the first time. HH is a venture capital arm of our single family office. We're based out of Singapore. we are actually also entrepreneurs. We've built businesses over the years. We've started. We've failed. We've grown. We've seen all kinds of operational challenges, and now we're on a challenge to basically provide finance to support founders that have a global vision, that are solving meaningful problems. We invest globally, but we have a strong edge, I'd say, for Southeast Asia, and we focus on companies that are based typically from out of Singapore, but we like to see a big vision. As said, we have invested from Series A to Series D. We realize there's opportunities everywhere. DeZy is a pre-seed or seed company, but we've also done secondaries and pre-IPO companies, and so we're a bit all over the place. But we've deployed a significant number so far and invested in, I think the number is more than 10, but that wasn't updated yet. And we're actively investing and working together with accredited investors. Again, we also do not have a fund, but we're very close with our friends, with our accredited investor friends. Some of the companies that we've invested in, like I said, some of the known names you might know. We've done YQ, which is quite popular in Singapore. We've done eJust, which is a pre-IPO company in the US. So a range of different companies. Too much to discuss for today. As said, we have a lot to discuss on the crypto. And I really want to move into that and take our time. But we're always open to speak to new investors who would like to sort of dip their toes into the water and start investing, angel investing, and happy to work with you. Feel free to reach out. All right, let's get started on the. Okay, there we are. Sorry. Yeah, so just the two of us today, but let's get started on the space. So I just did a quick poll. Question was if people that are currently attending this webinar invested in crypto. The majority actually says no. It's a small majority, but the majority says no, but I would like to try. So it sort of confirms kind of the state where we're in. A lot of people are sort of like flowing into this crypto world, are getting familiar. I think people see Bitcoin going through the roof, and I believe they're at 50,000 again. And a lot of people are getting interested into the space. Obviously, there's also a big part of people in this webinar that already hold coins. Some people might have joined a long time ago, and might even have seen some great profits. But it just kind of shows that this webinar is for a broad group of people. So I wanted to do a quick summary on what we're talking about here. Again, a real quick introduction on the topic of blockchain and crypto. This basically all started in 2009, and I'm just going to race through an enormous. Let me just race through a decade in 2 minutes. But basically, crypto started with Bitcoin in 2009. Bitcoin was launched as a result of the financial crisis, with sort of like an idea of like how can we decentralize fiat and lending, and how can we basically take out the middleman. That was sort of the broad idea. Well, whole research was launched. Bitcoin has been around since 2009. Picked up a lot of traction. I'd say around 2016, 2017, it really started to grow and started to get a lot of interest. Bitcoin was the original coin, but as we gone through this decade, a lot of sort of alternative or altcoins have been launched. Other platforms, Ethereum is one of them. There's actually, I believe there's over 1,000 right now, but Ethereum is one of the big ones that could be safely considered as a number two. And these guys are they went one step further, right? So where Bitcoin traditionally was purely a currency, a coin that you could trade, platforms such as Ethereum actually go one step further. They allow things such as smart contracts, and we'll talk a bit more about that. But that sort of like opened the space for the topic of decentralized finance, which is what we're going to talk about today. But that and NFTs, you might have heard of those. We don't have time to talk about that today, but that's sort of like the hot topic of 2021. But the bottom line is, because of this technology, you could build a blockchain, which is a decentralized platform between people where you don't have a middleman. where you can have agreements with each other, where you can trade with each other. And DeFi is a great example of that. That has grown a lot. Current market cap of is about 80 billion. Obviously, it's a small number, but if you look at how fast it's grown, because it actually effectively became popular last year, and the numbers, people expect it to grow to 800 billion by next year. So there's this whole steep curve, a growth curve that we're looking at here. That's sort of like a real quick introduction. I'm very well aware that this is an extremely complicated topic. I just hope that this clarifies what we're going to talk about today. Let me just launch another poll here and make sure that people are, are also aware of that. Okay, all right. So a couple of terms that we talk about that we will bring up today. We'll talk about blockchain. We'll talk about DeFi or decentralized finance. We'll talk about stable coins. We'll talk about smart contracts, and we'll talk about yield farming. So these are the sort of big topics that or the big terms that you sort of kind of like try to get familiar with when you start to look at this space. Blockchain, I've just explained, right? It's the decentralized network between people. Decentralized finance, I'll leave that for now. We'll talk a bit more about that in a second. Stable coins, those are actually a type of cryptocurrency. Also, we'll talk about that a bit more. Smart contracts, these are the contracts you can implement on this Ethereum or on these platforms that allow you to launch them there. And the yield farming is effectively a form of lending or a form of staking, and we'll talk about that more in detail also and what that means. But these are the relevant topics here. All right, let's get started and take a jump into the space. So lending on the blockchain. This is where we want to dive into with Eric. And Eric, I'm just going to run through and you got to help us out here to enlighten us. I think maybe the first question we have for you and for people here is sort of like to explain what is the difference between traditional lending and DeFi lending.
Yeah, sure. So structurally, I would say that there isn't actually like fundamentally a huge difference between lending over a blockchain or lending through traditional services. Ultimately, as you touched on earlier, the fundamental difference with all of these things is just the removal of the middleman, right? So traditionally speaking, you can go to a bank to deposit your funds. You can go to wealth management offices or whatever it might be to deposit your funds. And typically speaking, those account managers or those institutions are using your funds to then engage in lending services or other kind of like money market services, right? You don't always have a clear understanding or a clear picture as to what kind of money market products or services they're engaged in, but essentially they're managing your funds and you're getting whatever yield it is or ROI that you're getting at the end of the day. Ultimately speaking, when we're talking about blockchain lending or blockchain staking or anything like that, these are essentially traditional financial products. These are traditional financial processes, whether it's lending services, whether it's deploying capital into a trading pool or things like that, that we see in the traditional world. The only difference is that, again, it's sort of peer-to-peer. It's I'm acting on one side, you're engaging on the service on the other side, and it's all being governed by a smart contract. So I think that that's a common misperception, that essentially through the blockchain, we have somehow we've created entirely new financial products. Now, although that is conceptually possible, because basically what we're looking at is what's commonly referred to in the industry as basically money Legos. You can take these different smart contracts, you can take these different financial products and start piecing them together to create very complex services. But on a very fundamental level, specifically with respect to lending, it is the exact same engagement that we are accustomed to through banks and through financial entities, just without that middleman in between.
Right, and that makes it, doing it on that with that technology and these smart contracts makes that a very scalable, opportunity for everyone. So basically, it's one-on-one lending, but because of the technology, it's extremely scalable. And I think it's, not unimportant to mention, it's actually very transparent, especially lending on Ethereum.
Yeah, it's extremely transparent, not just on Ethereum, but essentially like blockchain as a whole. I mean, basically what we're talking about is just a public ledger, right? So, whether we're talking about Excel files or whether we're talking about whatever kind of systems traditional entities use, one, we're dependent on someone being responsible for that, and two, we don't always have insight into those ledgers. So yeah, incredibly transparent in that anyone, if they know how, can look at the blockchain and see exactly what's going on.
Right, and why would investors do this? Like, why would they not deposit their money with a bank? Why would they, involve themselves into this space?
Well, so technology aside, and just sort of like, the fascination with cutting edge technology and new innovation and all that kind of stuff, is purely from an investment standpoint. The opportunities are immense because, again, by removing that middleman, and before we talk about complex services or anything like that, but just by removing that middleman, you are freeing up a phenomenal amount of yield opportunity. Now, these yields exist in the traditional systems, right? Whether it's through lending or, again, money market products, automated trading pools, anything like that. These products exist and these yields exist. The problem with the traditional systems is that those yields are being eaten up through middleman fees, right? So there is the benefit of, it's very passive. You don't essentially have to think about it. You just kind of put your money in the bank or with your wealth manager, they take care of it. But you're getting kind of the peanuts that are left over, right? The exciting part from an investor standpoint with respect to DeFi and some of the products that are being created there is, by removing that middleman, the fees are suddenly shareable by everyone taking part in that product. Right.
Is it safe? Like, you jump into this space, you start to lend money. Is that is it a safe thing to do? Okay.
Look, I mean, the answer there is that it depends. It depends on a variety of things. So first of all, it depends on your comfort with technology in general. Like, are you comfortable looking at the blockchain and figuring out what transactions are going where? Are you comfortable, looking at a service and understanding their audited contract, reading their smart contracts? Are you comfortable with, like, digital wallets like MetaMask and things like that? So before we even talk about the underlying risk, there's sort of the user risk. How comfortable are you kind of diving into this, right? And I think the common comparison is basically like the internet of the 90s, right? Are you comfortable using a dial-up system and making sure no one's going to pick up the phone and knock you offline and all that kind of stuff? So that's just sort of like the user-related risks, right? Then we're talking about the underlying risks. The underlying risks on a protocol level. And so then we need to sort of compartmentalize which kind of protocols we're looking at. You have your protocols that, let's say, are pieced together very quickly. They're not audited. They are not governed correctly. They're not monitored correctly. So they may offer incredibly high yields or incredibly attractive investment opportunities, but frankly speaking, your money probably won't be there very long. So that's one piece of it. The other piece of it is there's an entire industry being built within DeFi specifically for insurance. So in the same way that in the traditional world, you can take out insurance contracts on your investments or on your assets, there's ways to do that in DeFi as well. So all that being said, the short answer is it very much depends. And what it depends on is how you want to structure your exposure to the industry.
Right. Can you increase your volume a little bit, Eric? I think there's a request from somebody, if that's possible.
I can certainly try. I'm sorry about that.
In the meantime, so basically we're saying, right? I mean, it is still internet in the 90s. I mean, that's a great comparison. Not everybody was sort of ready or savvy enough to get into it, or even had the time to sort of research this and try to figure this out. And I think we're a bit in the same phase now with with DeFi. It's just still early days. It's very interesting, very possible, but it's challenging. You need to spend time to figure this out. And I think that's also one of the reasons what DeZy is trying to do, and we'll talk about that in a second. But basically, help retail investors to speed up the process, basically.
100%. So just the last point on that, like before we even discuss DeZy, just generally the biggest problem. I mean, one of the biggest problems that the industry is facing is that technical barrier to entry. So there's, of course, like regulatory aspects and all sorts of other things that are still being worked on. But just on a pure tech level, unfortunately, not everyone can engage yet because they don't have the time to do the research, or they just don't have the technical capabilities to really grasp it all.
Yeah. Great. What is the view of the sort of regulatory authorities on this space? Is it I mean, you've spoken to MES here in Singapore, sort of, and we know Singapore is very progressive on this, but what's their general view on things?
So I definitely don't want to speak on behalf of MAS. I'm in no way wanting to put myself in a position to be responsible for their public position. But yeah, no, I mean, generally speaking, I think not just with respect to crypto and blockchain, but tech in general, I think Singapore has proven itself to be a very forward-thinking country in that they are obviously very concerned about, safety of consumers, specifically on a retail level. But at the same time, they foster innovation, they promote innovation, they want to see innovation from responsible market participants. So yeah. I think that Singapore is a great place to operate a crypto-facing business. And yeah, like I said, I mean, it's one of the more forward-looking countries, not just on a tech level, but then again, specifically with crypto. And it's one of the reasons that I think you're seeing a lot of crypto companies, one, start here, and two, migrate over here.
Yeah. So Eric, just for people that are just sort of like, dipping their toes in the water, how is the interest defined? Like, your rewards, like, let's say I lend you some money, how is this interest generated, and how much can I earn?
Yeah, sure. So again, it's very similar to the traditional space in that when you're looking at a lending and borrowing protocol, it is essentially dependent on how much of the deposited funds are being borrowed at any one time, right? So the more funds are being borrowed, the higher the yields will be, yeah? So again, in that respect, as long as you understand traditional lending and borrowing services or traditional insurance services, there's really no reason that you're going to struggle to understand lending and borrowing in DeFi or insurance in DeFi. Yeah, now, again, where those yields come from is, again, from that borrowing and lending practice, specifically with respect to that aspect of DeFi. And again, yields do fluctuate, right? So depending on utilization rates, you'll see yields go up or down. And that's often related to like market activity and things like that.
Right, okay. Are there actually different blockchains where I can sort of like lend my money, or should I just stick with the big players like Ethereum?
Yeah, so again, there's a variety of different chains and ecosystems. So you have Ethereum, which is one of the more popular smart contracts, but you also have things like Solana and Terra, Binance Smart Chain, a variety of different chains that are all active in this space. And I think that's also a reflection of sort of the maturity that we're seeing in the crypto space in general. I think if you rewind 4 or 5 years ago, it was a very, very tribal environment where, like every chain had their supporters, and all those supporters are willing to die on the hill of their chain. What we're seeing today is a lot of sort of cross-chain activity in terms of people trying to facilitate bridges from Ethereum into Cosmos and Cosmos into Terra and back into Ethereum. So yeah, there's a variety of different places that you can do this in, and the industry is becoming a little bit more cohesive around that.
Right. And so what's the importance of these smart contracts? Maybe you can, we talked about it. Why do we need that? I could just lend you money, no? And you could, you're devil's advocate here, but why are we having these smart contracts?
Yeah, sure. So smart contracts are basically what govern the entire system, right? So yes, you could lend me money, and I could promise you to give you that money back or give you a yield back, but I might not. And if I don't, then you can take me to court, and we can go through that whole process, et cetera, right? Or maybe I have the best intentions, and I do want to pay you, but I'm late, or I forget to pay you on the date, et cetera, yeah? Smart contracts just govern all of this. So it automates the entire process. So earlier in the deck, you mentioned something about NFTs. So one thing that's very interesting from the perspective of smart contracts in the NFTs world is if you look at it from an artist's perspective, today, if an artist sells a piece of content, whether it's a painting, whether it's a piece of music or video, theoretically speaking, they're supposed to get royalties from the secondary market, right? So if I sell my painting to you and you go and sell that on to someone else, conceptually, I'm supposed to get some kind of a percentage of that, right? But there's a lot of trust factors involved with that. On a smart contract level, my crypto wallet is just permanently receiving those royalties every time that piece of content is sold on to someone else, right? I don't need to chase you. I don't need to chase the new buyer and things like that. So again, very similar to what we see in the traditional world, that movement of money, that movement of trust. It's just governed and guaranteed by the smart contract.
Technically, it's so much more efficient, right? And to just basically automate the whole process. And you know, if you don't pay me back, we'll just liquidate your coins. I get my, you know, collateral that way. And you know, the whole process is standardized and simplified in a way. And
well,
I think that's
yeah. Sorry, just coming back to the lending and borrowing specifically, that's the whole thing, right? Like, so
yeah.
In the traditional world, often your lending, your borrowing position is under collateralized, right? When we look at the crypto space, yes, it is actually over collateralized, and there's specific margin call barriers that are put in place. So again, coming through the smart contracts from a lending and borrowing standpoint, that liquidation is effectively guaranteed on a programmatic level. So yeah, again, I think this one of the big misconceptions with respect to what's taking place in crypto and blockchain is that we are entirely inventing new things. And although there is an aspect of that, really what it boils down to is we're just making existing processes far more efficient.
Yeah, yeah. Before we go to the next question, I just wanted to take one question from the Q&A that you might be able to answer real quick. But do you see in this space, do you see a lot of retail lending, or do you see commercial lending? Are businesses sort of like get involved in this, or is it purely consumers still?
So I think historically, obviously, a lot of the push in the crypto space has been very much on a retail and consumer level. And it's kind of been one of the most exciting things to see about the space, that a multi-trillion-dollar industry has essentially been built by the efforts of retail individuals. That being said, though, there is a growing level of involvement from institutional players, whether it's banks, family offices, insurance, endowments, et cetera, right? So we're definitely seeing a lot of that. I can tell you firsthand that I'm also in touch with a variety of funds who are building very similar services to DeZy, but for ultra high net worth individuals, right? So yeah, there's a lot more validation in the space. There's a lot more respect for what's taking place. There's a lot more regulatory clarity. So historically, pure retail. Moving forward, I definitely expect to see more corporate and institutional involvement, and I think we're already starting to see that.
Yeah, I totally agree with you. Yeah. Okay, fantastic. Just a bit on these stable coins, because we actually, you know, we're sort of like talked about that. But why stable coins? Like, first of all, just for everyone here, stable coins are coins that are pegged to the US dollar, or at least to an actual fiat. And so you have one stable coin which is worth $1, and the logic is here is that that value will never change, and so you don't have that volatility which you currently see in Bitcoin, where it just goes up by thousands of dollars a day. So there's no capital gain. But is that the only benefit, or is there other benefits of using stable coins for lending?
Yeah, so one thing that I'll just clarify is that there are a few different kinds of stable coins. Like, there are some stable coins that are actually what are called algorithmic stablecoins, and they're effectively not backed by anything. So it's conceptually a very interesting concept, but no one has really been able to get it right. But yeah, in terms of I think the main stablecoins that we're discussing are things like USDC or XSGD that are actually pegged one-to-one with a dollar. So yeah, in terms of the benefits of using them, again, it's just you're avoiding the fluctuations of core crypto assets, and you can transact on, I would say, like a more transparent and stable basis. So again, it's just a question of efficiency optimization.
Right. Okay, I think before we get into DeZy and what you guys are trying to do once more here, and you kind of answered the question, right? I mean, how do I participate? So, you know, I want to get started with this. I'm new to the space. I think we went through a range of things. I need to set up a wallet. I need to understand, you know, which blockchain. I need to, you know, I need to go through this whole wood, but it's possible, right? I could, you know, me being a retail investor or any investor could get started. How much time do you think it will take me to get started with it?
Look, it's
going from zero to.
It's difficult to say how much time it's going to take someone to get started, right? But what I do find historically quite funny is, so earlier during the call, you mentioned Bitcoin is crossing 50,000, right? And what I typically see, and I'm sure anyone on the call who has been in crypto and has non-crypto native friends, is as the prices go up, everyone asks, okay, where do I buy it? How do I get involved? When is it going to the moon, right? I think that's a terrible place to start from, because this is a very complex industry and the fluctuations are significant. So even before we start talking about like how to use a MetaMask or a digital wallet or anything like that, I just think doing proper research into like really understanding how these things work and why they work and why they're being used is sort of the best place to start. And there's a phenomenal amount of content online from people who have been in the space for ages, ages in the context of a 1 decade old industry. Once you get through that, then yeah, I think just sort of getting started is the best way to learn. Like, you know, take however much your expendable capital is, even if it's just a couple $100 on board, start playing with the protocols, and I think that's the easiest way to sort of see the benefit of it all. But yeah, I do find that basically as the prices go up, people get very excited to just dive in, and that's a really, really dangerous way to lose all your money really quickly.
Yeah, that's a recipe for disaster. I totally agree with you. And let's get into, you know, let's get into DeZy a little bit, because, you know, you guys are sort of, you know, targeting that group that, you know, who might not want to, you know, try to figure that out, like who might not want to back to the 1990s internet revolution, right? Figure out how to set this up, buy a modem, dial in. You know, the majority of people probably does not have time to look at this space. And I know that you're targeting, but are you sort of, can you explain in a little bit, like what is it that what you guys are really trying to do here?
Yeah, so and I hope that this touches on some of the questions that are being submitted on the Q&A. We can go through.
Yeah, but we have a lot of questions here, and I think we'll try to answer them as we go. But some of them might remain, and we'll try to pick them up later.
No, yeah, no problem. But yeah, so essentially what we're trying to do is we're trying to target people who are not active in the crypto space, right? So in my opinion, one of the problems with the crypto industry at the moment is that you have a lot of really smart teams, but basically you have a lot of really smart crypto teams who are building crypto products for other crypto people. So it's like, if you already have that level of understanding and you're already active in the space, phenomenal amount of innovation that's taking place. What I feel the industry as a whole is forgetting is that the rest of the world are not just going to figure it out. We need to provide them with something familiar. So what we're trying to do at DeZy is we're trying to provide the rest of the world a familiar way to enter the space. So instead of evangelizing them on the wonders of DeFi and the wonders of crypto and why they should all go buy Bitcoin or Ethereum, we're trying to provide them a way where they can sort of taste the benefits of DeFi, start to understand DeFi, but in a dollar-denominated way. So effectively providing them a familiar fintech service that just happens to be built on DeFi protocols. So for us, that kind of like fits into our vision of what DeFi is supposed to be. Again, kind of a crypto ethos, or among some crypto participants, there is a belief that DeFi and crypto is supposed to replace traditional finance. And I do not in any way, shape, or form agree with that. I think that what we need to get towards is that fintech becomes DeFi and DeFi becomes fintech. So when we talk about DeZy, we're not a crypto company, we're a fintech business that just happens to be using DeFi as an underlying technology. And yeah, trying to bring that to basically non-crypto participants who either don't understand the space, don't have time to get involved in the space, or have just, you know, been exposed to some really nasty stories about some of the darker sides of the industry.
Yeah, and I think that's just to reiterate here. It is really a misunderstanding that you know, decentralized means that everyone is just, you know, on its own trying to figure this out and sort of like try to participate in this ecosystem. I think the reality is that there is still going to be a lot of companies built around this blockchain who might not necessarily be middlemen, but you know, they could facilitate the process of getting entry, right? And I think that's what DeZy here is doing. I mean, DeZy is not trying to sort of be a new middleman. And I think that's one of the questions we also got here is like, you know, how you know, we're not or DeZy is not a middleman. DeZy is facilitating entry into the space and, you know, grabbing people by the hand and sort of like taking them through the landscape. I think that's correct, right? Or you wanna add something to that?
No, I would say that that's broadly accurate. We want to be a bridge. We want to be a bridge for people who are not yet in the space. So if you are an active crypto participant and you are already deployed into DeFi protocols, you probably don't need DeZy. Like I said, who we want to target are the people who, whether for technical barriers of entry, lack of understanding or lack of time, or just fear in general, they are not participating for those reasons. We want to be their bridge. Yeah.
Okay, I think the second one. So just, you know, to dive in a little bit more on how you guys operate. So now we understand what you focus on. How do you generate these returns for people? Do you work out multiple strategies, or what's the logic here?
So at the moment, we basically take on stablecoins. So our customers are onboarding through third-party partners of ours. So we have third parties who are handling the KYC. We have third parties that are handling the deposit of fiat for a variety of different reasons, from just sort of like a service flow efficiency standpoint, also for regulatory considerations. We have to be very mindful of how we structure the business. So yeah, our users are registering with us, conducting KYC and fiat deposits through a third party that we are integrated with. And once their fiat is deposited with that third party, we receive stablecoins. Those stablecoins are then programmatically deployed into a variety of different DeFi protocols. And those DeFi protocols are generating that yield. For the moment, we are primarily doing relatively straightforward strategies. So these are like single asset deployment strategies with a single asset reward. As things scale, we're definitely looking at more complicated strategies, whether that's like single asset deployment and a double asset return, or getting involved in liquidity pools or things like that. So at the moment, it's stablecoins into various simple strategy DeFi protocols, but we haven't scratched the surface with respect to the complexity of the strategies that we can look at.
Yeah, I think with that, we also answered one of the questions here, or multiple questions, whether DeZy will ultimately move beyond just lending and stable coins. But as Eric said, there's different.
Go ahead, Maarten.
No.
Specifically with that question, and perhaps touching earlier on the question of like middlemen and stuff like that. This is where we're starting, right? But like I said, like we feel that the crypto industry is trying to basically evangelize crypto to people and just hoping that they figure it out. We want to start here, get people comfortable with the idea, and as their comfort grows and they want more, we hope to basically grow with our users. So it is possible that over time we will definitely be looking at more complex lending strategies just to optimize yield. But as those customers grow in terms of their comfort, their understanding, and their willingness to participate, we'll definitely hopefully be in a position to introduce them to more core crypto services as well.
Yeah, great. Thanks for that. Guys, there's a lot of questions coming in. I'm trying to filter through and try to keep it as pragmatic as we can here. Just maybe. Yeah, this will be a bit more about the competition. I'm going to take a few questions, Eric, before we continue, if you don't mind.
Yeah, go for it.
So is DeZy currently regulated by the MAS?
So at the moment, we don't engage in any regulated activities. So as I mentioned, we're very mindful of how we structure the business, in that there are a variety of things that we cannot do. So we cannot handle fiat deposits directly and things like that. So we were very mindful to integrate with partners who could handle some of those services for us. In the future, we definitely hope to expand sort of our licensing and regulatory positioning and things like that. But the simple answer is no, simply because at the moment, the way the business is structured is we don't engage in any regulated activities. But we hope that that's going to change in the future. But yeah, we are in Singapore. We're super mindful of MAS, and we're super mindful of what we can and can't do. So we definitely want to be an above board market participant in that respect. Right.
And are investors outside Singapore able to invest in DeZy currently?
Hopefully one day. At the moment, we're just starting here in Singapore. Basically, we want to get the narrative and the service right somewhere. Singapore is a financially savvy market for the most part. For the most part, people have some investable income. And of course, Singapore has that brand of like a financially relevant country. So yeah, we want to get it right here, and then hopefully we can branch that out elsewhere.
Sorry, is that a KYC restriction, like currently on the onboarding part?
Yeah,
you only can onboard.
That's correct. So even on just like technical KYC level, we can only handle that here. But that's just a technical extension question. So yeah, eventually we definitely hope to open it up to others.
Right. Just I'm getting a lot of questions on people asking like, why should I invest in DeZy? And I think I might have to clarify once more here that DeZy is a service for retail investors who are not familiar with crypto lending. And I think if you're an expert, you're already putting your money in these lending pools. DeZy might not be for you. Am I right? I mean, or do you have any service that you say, well, you should still come to us? And
no, as I think I mentioned, if you are active in the crypto space and you are comfortable with MetaMask and you are deploying into AMMs or anything of that sort, you do not need DeZy. I think for most crypto participants, if you tell them that there's an opportunity to generate 5% yield, most of them will not be interested. Some may even respond with more vulgar feedback. Yeah. So really, who we are targeting are the non-crypto natives, non-crypto participants. Yeah, who are basically accustomed to relatively low yields, right? So especially on a like very retail level, you're looking at people who have money deployed into savings accounts in their banks, which are generating less than 1% APY. You're talking about users who are using fintech platforms that are generating 1.2% in fixed APY. And that's who we're trying to target, right? So there was also an earlier question, I think, of like, you know, why use DeZy when you can use things like bonds and REITs and stuff like that, right? So I think there's a couple answers there. So first of all, it depends what kind of an investor you are. Not all investors are savvy enough to invest into REITs or bonds or things like that. And secondly, I think there's also an argument to be made that maybe everyone except for crypto people are usually not 100% deployed into one asset class, right? So you have your like hardcore crypto participants who they don't want to talk about anything but crypto, but I think your typical investor is looking at a diversified portfolio of investments between their savings account, between bonds, between stocks, et cetera, et cetera. So again, for us, it's targeting the user who is either 100% deployed into very, very low yield savings accounts, or a slightly more savvy investor who has a diversified portfolio.
Right. And I think that's an interesting point. In the end of the day, what we're seeing happening here is a complete new asset class, right? That's ultimately the place that we all think crypto will take in people's portfolio and say, well, look, I have my bonds, I have my REITs, and I have some crypto. And that crypto could consist of just holding coins to get some capital gain, but it could also simply be, you know, lending and getting in earning fixed income on that. So it's hard to make the comparison, but in the end of the day, if you say, well, look, it's a new asset class, then you're like, starts to make sense where you can sort of put this crypto.
Yeah, and I think that it's a fair statement to make because, like I said, I mean, if you look at the market cap of the crypto industry, we're, I think, nearly $2.5 trillion of market cap.
Yeah, we cannot ignore this anymore. Yeah. We're not at that point anymore. Yeah.
Yeah, it's hard to ignore it, and again, I think even on a regulatory level, we're seeing that as well. Like there was the recent infrastructure bill discussions in the United States. Now, although the crypto industry wasn't really able to completely stop it, I think there was broad shock as to the amount of noise that the crypto industry was able to make. I think there was broad shock as to some of the U.S. senators who came out in favor of crypto. So I think basically what you also have to look at is sort of like the age demographic of who crypto is really attracting, and that age demographic is the voters of tomorrow. So I think even from like a government and regulatory level, of course, there are precautions that need to be considered, but it's arguably dangerous for governments to continue to ignore this because their future constituents really, really care about it. So yeah, no, I agree with you 100% that we are far past the point where this can be ignored or just thrown back into the box. Yeah.
Awesome. Let's get back to how you're trying to do all this and how you're trying to build your business here. You know, just on your competition, some of these robo advisors, they have sort of like indicated that they might also go into the space, right? Robo advisors typically focused on ETFs and bonds. They're like looking at it. How will you compete with them if you know, if one of those guys says tomorrow, I'm going to launch a crypto portfolio?
Yeah, sure. I mean, look, there's a variety of different perceived competitors in the space. So first of all, we don't feel that we're competing with core crypto services because, like I said, core crypto services are for crypto people or people who are already ready to make that jump. We are targeting, non-crypto participants or people who are looking for a diversified portfolio. Will robo-advisors, will banks offer these services directly? Potentially. Just here in Singapore, for example, DBS does operate a crypto trading desk, for example. However, that crypto trading desk operates 9 to 5, if I'm not mistaken, 5 days a week. And it is exclusively for their private clients, which means that you have some level of wealth already established. So that is not inclusive of the entire market. And it just depends on how these robo-advisors or other fintech platforms will decide to incorporate it. In some cases, it is very much in contrast to their public positioning on the kind of products that they want to offer people. It's also unclear, will they just use it to optimize their underlying spread, or will they actually make it customer facing? So it's too early to say. But like I mentioned earlier, we do think that DeFi becomes fintech and fintech becomes DeFi. So whether that's DeZy who accomplishes that, which we obviously hope will be the case, someone is going to do it eventually.
Right. And how big do you think this opportunity is for you?
For DeZy specifically, or for like just DeFi as a whole?
I think for DeZy here, like what is the opportunity you see?
Well, just in Singapore specifically, there's over $400 million of dormant capital sitting in personal savings accounts in banks. That doesn't include savings accounts sitting with fintech providers, and that doesn't include other pools of dormant capital in the country. So the opportunity is massive. And we unfortunately see a situation in Singapore and globally where the common consumer, the retail consumer, is lacking quality opportunities to better themselves financially. Not just here in Singapore. I mean, if you look at Europe, there's many countries across the continent that are implementing negative interest rates on relatively low balance bank accounts. So yeah, I mean, I think in most cases you would hear a founder proudly say that the opportunity is global. To a degree, I say it's almost unfortunate that the interest rates are so low, savings opportunities are so bad to the non-financially savvy user that, yeah, we have a very large target market.
Yeah, yeah. And I think, to prove the case, I mean, in the end of the day, these robo-advisors that have been around for a while have been capturing some of that market. And, they also proved that they are able to get people to actually start to invest. And I think that's a good thing for DeZy also, because it proves that you can convert users to start doing that.
And that's why we wanted to approach it the way that we're approaching it, right? So like, instead of coming across as a very core crypto service, we want to present ourselves as a familiar fintech platform, because like you correctly say, there has already been an acceptance of that as a concept.
Yeah, awesome. I know you've been working on DeZy for a while, but effectively the product was soft launched last month. Very exciting. I've been closely involved with it. What's the traction you're seeing so far?
Yeah, so you are correct. Yeah, we soft launched about 4 weeks ago or so. Yeah, we're happy to see that people are onboarding with us. So we do have some users on board. We have some deposited funds. We're seeing average deposits in the area of about $1,000 per customer. What we're also very happy to see is that once we actually get a customer across the line, so after we explain the narrative to them, that comfort level is there, and they make their first deposit, we are seeing people, like the ice is broken at that point, and we are seeing people then make subsequent deposits as well. We're also trialing some things with corporate partners, where some of our corporate partners are introducing DeZy as basically like a perk through their HR department to their staff. So yeah, super early days, but we're happy to see customers understanding our message. But there's still a lot of work left to be done in that respect. Right.
If people would like to, people listening to this webinar, watching this webinar, and they're like, should I jump in here? Is this for me? And how much can I earn? Is it worth it? What would you say to them? Like, what's your message to them? How much can they earn?
I mean, I'm very biased, but yes, I think you should get involved. Yeah, no, jokes aside. Look, like I said, if you're already in the crypto space, then no, you probably do not need DeZy. If, however, you are interested in learning more about DeFi and just sort of starting to understand how it works, then yeah, I do think that DeZy is a viable starting point. So we have 5.25% APY, which again, in comparison to some financial products, may be on the lower side. However, in terms of any kind of passive savings opportunities that you're engaged in right now, whether it's fixed yield with a fintech solution or fixed yield in a bank account, I do think that DeZy offers a very low barrier to entry in that you are depositing Singapore dollars. You don't need to worry about any of the complexities of DeFi. There is no lock-in period. So if at any point you're uncomfortable or you don't like it or you see a better opportunity elsewhere, you can withdraw. And it is compounding at 24/7. So yeah, like I said, if you're in crypto, probably don't need it. If you're not in crypto and you want to start basically getting your toes wet, this is a place to start.
Just back to a question on that interest, right? You mentioned indeed, like currently you're offering 5.25%. How did you get to that? How did you get to that percentage? Is that something you've historically seen, or how is that sort of? How can you sort of prove that you can earn that for people?
Yeah, so it's kind of funny. So like if you look at the DeFi space itself, again, you have a full range and spectrum of risk levels and whatnot. But even if you look at the relatively battle-tested, proven protocols that have been audited, that are very transparent with respect to how they handle their risk management, you're looking at yields that are ranging from like 10 to 50% APY. Now, what's funny is that before we launched the business, we obviously engaged in some kind of preliminary customer discussions, trying to gauge what the market was looking for. We initially wanted to offer 10% to our customers. And the most consistent feedback that we got from people, again, non-crypto native users, was that is absolutely impossible and there must be something funny going on. Because essentially, through the traditional services that they've been exposed to, 10% is just outlandishly unheard of. Which is also kind of funny because if you look back at sort of like the 80s and the early 90s, you know, to get like a 7 to 10% fixed yield from your bank account was possible. But for the past 10, 30 years, that just hasn't been the case. So we reduced it essentially to something that was more palatable to our users, which was that 5.25, which still compares very favorably to a lot of the traditional services that they have access to. But yeah, if you look at it on an underlying DeFi level, that gives us a lot of opportunity to experiment with different strategies and different protocols.
Yep. Fantastic. All right, so just to getting to the end of this, just real quick, if people want to get started, I just got a question on whether we are pitching here to get people to join, or there's an investment opportunity for them. I will clarify that in a second. I think on one hand, people are free to join. It's not that, that's one of the angles that we have here, if you find this interesting. On the other hand, there is an investment opportunity for interested investors also. I'll get to that in a second, just to clear that up. Last question on this: if people want to get started, what's the way to go?
So yeah, you go to the website, you register. You'll need to go through a KYC process. That KYC should take you 5 to 10 minutes. And then, yeah, assuming you submitted everything correctly, you'll be verified within a couple hours. And then you'll be able to make a pay now deposit.
Right. Fantastic.
Yeah. And
all right.
To touch on, if you don't mind, Maarten, just touch on that last question and expand on it a little bit. Will the deposit limits increase in the future? Yes, absolutely. As I mentioned, we're 4 weeks into this. So for all intents and purposes, this is basically still a soft launch. So there's a variety of things that we're doing in terms of working to increase the deposit limit, working to improve some of the KYC procedures and some of the deposit procedures as well. So right now it's only pay now. In the near future, we'll support things like bank deposits and things like that as well.
Right. Okay. Thanks. There's still a number of questions. I just want to jump to the next slide, as that clarifies one of the questions I got from another investor. So DeZy has been raising funds. I believe that they have already closed quite a bit. I think the round is almost closed. We have gotten an exclusive allocation for HH investors. So if people are interested to invest in DeZy, other than becoming a customer, you can actually hold a small stake in the business itself. We have an allocation available through HH. We'll be happy to share more details on that, what the terms are. People will be able to share a little bit of a data room with people. The round is closing pretty rapidly. As said, that allocation is still available, but the rest of the round is pretty much closed. So we're looking at probably already making a decision on this probably next week. So there's a bit of a speed involved here. Eric, anything to add on this? I'll be happy to share more details with people, but I just want to keep the focus on the business here.
No, nothing to add. Happy to go through some more questions if you'd like. But no, nothing to add. I appreciate the opportunity to discuss this, crypto in general, and DeZy specifically.
Right, cool. Let's take a few more questions. We have a couple more minutes, and then we'll wrap it up. Again, people that are interested in investing, will follow up with everyone after this call, and there will be an opportunity for you to ask further questions or proceed with that. Just a bit more on the future of this space. What do you see where this all is going? This fintech space, or DeFi in specific.
Well, so I'll say it again. I think that eventually DeFi becomes fintech and fintech becomes DeFi. I think broadly speaking, as services scale, people are no longer interested in how they work, as long as they work and they work better. So today we're on a Zoom call, and I could not tell you for the life of me how this call works on an underlying technology level, but camera seems fine, microphone seems fine, and yeah, we're all happy because of it, right? And I think that eventually that's where fintech gets, that it will just function on DeFi and people won't think about it. They'll just see that it's a more efficient service. And that's before we start talking about, like I said, that money Lego of creating new financial products and more complex financial products. But yeah, that's where I think it becomes, it just becomes one more efficient ecosystem.
Right. In terms of security, Eric, maybe touch on that a little bit. There's been incidents in the past in general within the space. How do you deal with security? Is it? I mean, it must be something you're very much aware of. Is there any specific tools or specific operational flows that you have in place to deal with security?
Yeah, so there's a few different levels of that. So first of all, just in terms of which DeFi protocols we actually choose to use. So if you look at some DeFi protocols, they will promise you unbelievable returns in terms of potential APY. But those protocols typically do not last very long on a technical level, so your funds will be lost. So yeah, first level is just sort of like filtering through who we actually use. In terms of the flow of stablecoins, we use multi-signature wallets, so multi-sig wallets, which basically prevents any single individual from just withdrawing the funds to wherever they want. There's multiple layers of approval process for those withdrawals and deposits. And we're also looking into insurance protocols. So we want to make sure that even as we distribute the stablecoins across a variety of different DeFi protocols, so even if something happens on one of those protocols, it doesn't impact all of the funds. We are still looking at integrating with insurance solutions within the DeFi space that allows us to insure those user funds.
Right. Okay. Great. I think, Eric, we're gonna get to the end of this this webinar. Again, to everyone here, thank you very much for participating. Feel free to provide us with feedback. Feel free to reach out to us through the channels that you have. We're on WhatsApp. For new people or people that have joined us for the first time, we'll be reaching out to you via email. That gives you an entry to talk to us. We're on LinkedIn. That's where we usually post our sort of updates on what we're doing. I'm not sure if we've been able to answer all the questions today. There's been a lot. I really appreciate the active participation of people. It's really exciting. I want to thank Eric here. Eric, fantastic. I want to wish you success with the DeZy journey. And you know, we're all hoping to see a lot more from you and hoping to hear a lot more from you. Thanks very much.
Yeah, I appreciate that. Thanks for the support on an HH level and also for facilitating this. It was good fun.
All right, everyone, have a good day and let's be in touch.